Good evening, everybody, and welcome to another edition of Live Market Analysis. What a pleasure it is to be with you as we are going through such an exciting time in markets. I mean, look, I can't say whether you're punching the lights out. Hopefully, you've got a bunch of the shorts that I've been putting in every day, day in, day out for over 12 months now. And some of them have been in those lists for 12 months and have halved in value or more. But it is just a really exciting time to be in markets. And if there is any consolation, if you are experiencing some losses, it is a good time to learn and cut your teeth, if only to know what to do better next time. And even I'm figuring out stuff on how to improve things. I've spent hours over the weekend thinking about risk management models and portfolio management models and how to run things. Look, there's always an upside there. Let us, before we get too much further down the track, talk about the disclaimer, which says that everything we're going to discuss tonight is general in nature, has not taken into account your personal financial circumstances, objectives or needs. So before acting upon any of this information, you should consider it carefully or seek the help of a financial professional to help determine its appropriateness for you. It's important to remember that in markets like this, or any market really, we could lose money. Trading is a risky business. And you should always seriously consider what you do. It's always you that's responsible and not me. With that in mind, let's get your requests rolling. I can see a few coming through already. I've got a few offline. You ask the questions, I'll try and give you an answer based upon the analysis and hopefully teach you a little bit more about technical analysis and markets along the way. We're going to kick off tonight, as we always do, with our portfolio management model. We're not going to look at Life 360. We're going to head over here to the Nasdaq Composite. And zoom in. You would have seen my tweet on the X platform this morning where I said that's how the cookie crumbles. It literally is crumbling, isn't it? The cookie, the Nasdaq Composite cookie, is crumbling in front of our eyes. I went through in tonight's evening wrap and documented some important dates. And I think one was that date there where the short-term trend established. So we had the first pink ribbon. Really since all the way back in September last year. I mean, that's a pretty good sign that something wasn't right. We had a string of black candles up into and including that one. No doubt we moved to a higher conservatism setting or a lower risk in the market setting on that day. I can't remember exactly what it was. Order of magnitude, I want to say, on that day we were about 50%. And then on this day, the long-term trend changed. It was no longer an uptrend. That says a lot. I mean, there was a little blip there, but otherwise, something pretty serious is happening when that occurs. Lower peaks and lower troughs actually occurred on that day also. And then we had our first peak set under the long-term trend ribbon, might have been there. Then we had another one there. But really, this is the final throes of this transition from a demand-side market on the left to an equilibrium market, which is what we have been, to what I think now it's very hard not to concede defeat for the bulls, on behalf of the bulls, that we are in a, dare I say, long-term downtrend. If this was a turnaround set up for a long, we'd be looking to buy it because we'd invert everything. All the black candles would be white and, we'd be moving back above the long-term trend ribbon that had turned amber, not below it. We'd be looking for high peaks and high troughs and all those things. So it makes sense that the opposite of that must be true, that we're moving into a downtrend phase. Look, I think we are there. I mean, it's just really splitting hairs as to whether we call it based upon Friday's horrific candle or we wait for a close of 17.23. I don't think it matters. Let's say we are not going to move off our risk management model prescribed 1/3 max risk. And that's really all it is. I mean, we can say, oh, well, I probably could have predicted it then or whatever. I think what we can say with absolute certainty is we took steps. If you're using my model, you took steps before today's big hit to move risk out of the market. And at most, last week, we said you could have had 1/3. And, funnily enough, and this is the way it works, and it just is, last week's candle, if that was Friday, Thursday, Wednesday, Tuesday, Monday, we're looking at this candle. And it's always the case, isn't it? Mondays we get thrown a dummy by markets. And we thought, look, it's looking pretty good then. Actually, it's if I go back, it looked good. We all agreed, well, at least I agreed, you were listening, that we said there was a chance. And that is order of magnitude. I played you the Dumb and Dumber Lloyd Christmas and Mary Swanson clip. There's a chance, and that's it. And the full extent of our actions based upon that was to move to, if you wanted to, your maximum 1/3 invested, but by default you still had to have 66% of your cash, of your capital in cash. You look at your standard balanced fund right now, that have a cash allocation typically between 5 and a absolute maximum of 10%, and that's all they can do. They're still 90% invested right now. Hopefully you're not, and hopefully I had something to do with that. But backing these up, and I started banging the drum aggressively about it last week, and I really wish I had done it earlier, but I just assumed that it's something you guys were doing because the setup's so bloody good. Was supplementing some of that 1/3 max with some short exposure as well. And I would say order of magnitude, even in a bona fide downtrend, which is what we're probably in, you're looking to go to like a full cover. So you've got a maximum of a third of your portfolio on the long side and a maximum of a third of your portfolio on the short side, and that means you're still a third in cash. You might say, hey, shouldn't I really be going full risk position on shorts? Because when the market was going well, I was full risk position on longs, or I was allowed to be. And no, that's just not the way I operate. You can do whatever you want, of course, but bear markets are tricky typically. I mean, there are a couple of bear markets that were amazing and that were actually quite damn easy. But typically they're quite tricky to trade because the moves are quick and then you have to cover back quick because everybody's looking to do the same thing. Whereas in a bull market, people kind of expect markets over the long term to rise. And the statistics show that bear markets are typically 1/3. I'm using rough numbers here. I have done this research. I'd have to go find the article, but order of magnitude 1/3 the duration, 1/3 the size of a bull market. So you kind of have to be a bit swift, a bit clever, and a bit nimble to do really well in them. And that's why I have that limit. So if we are in that bona fide short-term downtrend, still a third cash, I still think that's a great place to be right now. A third to the long side is your maximum. Doesn't mean you have to be there, and a third is your maximum for shorts. It also doesn't mean you have to be there if you want to sit on your hands until the next great uptrend establishes. And what will it look like when it establishes? Well, probably something like that. That's an intermediate one, but more like this. And are we about to start one of these phases? So you can see, look at this. What if I did this? I should have done this at the start. What if I did this at the start and then just said something to you like, and just started doing analysis like that was today? I reckon some of you probably wouldn't have even noticed. Let's stop the webinar right now and have a look at that, ladies and gentlemen. What do you notice about that chart compared to today? I mean, is it not freaking identical? And that's not an accident. That's how trends change, and that's how I've developed my model. My model wasn't developed by accident. It was developed by looking at this shit happening over and over again. Now, does that mean we're guaranteed to see this occur? No, but I can tell you there's a bloody good chance it will. I mean, that wasn't easy either. Look at that. Look how severe that short covering rally is. And maybe that'll give you some idea of why I have these limits. Well, maybe that was a smaller one, but still can be that can be painful. And even there. What are we going to do here? I can't remember. Oof. I mean, that would have hurt. Do we go back down again? Do we go back down? We do go back down. Oh my gosh. And there you go, ladies and gentlemen. Hopefully this is helping you look at that. We made a new low. And there's nothing surprising me about this stuff because I've lived through it so many times. But this is why we don't go all out shorts either. Okay, but we have them. And, we have the same models to help us exit those shorts as we have to exit our longs as well. And fast forwarding into the potential future, it's going to take a while to build a base pattern, funk around at that long-term uptrend ribbon from beneath heading above again. And at some stage, I just started this last thought bubble by saying, if you wanted to sit on your hands, there's no harm in that either until you start to see something like this. And then strap in, because bull markets tend to last years longer than bear markets, and they tend to go up multiples of what bear markets go down. And that's really the phase that we then are happy to be fully invested in. That is a little bit of a trip down memory lane, ladies and gentlemen, but I think quite relevant for what's happening now. Look at that. Eight markets, great. I get goosebumps when I talk about this stuff because I really, really, truly love markets. I think they're brilliant. And what's even more brilliant about them is that you can learn from your mistakes and be better next time. Isn't that great? Because that's not always the case in life. I better keep going because we'll be talking about history and markets all night long. Give me a thumbs up if that was any value to you. Otherwise, I will shut up and just do this very quickly. Okay, there is some value in there. Good. I'm looking for the macro watch list so I can head over to the ASX 200, which coincidentally is doing, thank you very much everybody, is doing the same thing. And I actually think this looks a little bit better than Nasdaq because we're still rising peaks and rising troughs, funnily enough. In fact, that last candle will make a new lower trough at some stage, but nutshell, the price action is better. When we're further away from the key level, which is 77.33. And I don't think, to use the phrase, the fat lady has completely sunk here. She's not finished. She's working her way through the last verse, perhaps, whereas the Nasdaq, yes, she's having a drink of water and catching gladioli. Is there anything in the other charts to suggest that we shouldn't be at our maximum conservatism setting and looking to take on a little bit of short exposure? If you're not comfortable with shorts, don't do them. If you're not comfortable with it, do some paper trading. Paper trade some shorts, see how they go. Get comfortable with it and then do it because they're not for the faint-hearted. I was going to say something else. I was going to talk about the concept of unlimited risk, but I don't subscribe to that. I mean, we're not going to do that. We have signals, but if you're irresponsible with them, then they can cause you great pain. I think that's the better way to put it. But get comfortable with them and then use them. Don't be that person that goes, I'm going to FOMO into shorts, right? Because I'm excited about this trading game. I can see the market's going down. I can't afford to miss out on these shorts. Okay, I mean, don't FOMO into anything. Let's go to Europe. Is usually where we go next. And like I said, as good as Europe was looking, with all that money flowing into Europe from the US, if the US wasn't going to do a quick pullback, then this stuff wasn't going to hold. Hey, the DAX is still very strong though, isn't it? That's coming off. That's going sideways at best, but hey, it's still a long-term uptrend. Hey, wouldn't it be great if we were trading FTSE stocks right now and saw Spain compared to us? What does that mean? What does that mean about us? Why do we have to follow the US? That's not fair. Let's go to Asia, and the Hang Seng's still pretty good. Nikkei's coming off, but not as bad as us. The Nifty 50 in India is not as bad as us. China's not as bad as us. Why are we so bad? Energy looks terrible. What did I skip there? Discretionary is breaking down. That's turning the corner as well. Energy financials is touch and go, although I deliberately put, you're going to see, tune in tomorrow to my scan list, and you're going to see CBA as a feature chart. It's there deliberately for a reason, because we still want exposure just in case. Gold still looks very good. No problems there. Healthcare looks horrific. Technology is in real trouble here. That's the other technology. Looks even worse than the XIJ, which is the older one. That's the newer one. Materials, that's a big move today. That is a scary move today for materials, because you can just see that chart is teetering at best. We might look at BHP tonight. That's teetering. There's your resources, just as bad. Property is gone. Staples Holding, defensive asset. Telecommunication services is the Telstra sector, so it's half defensive, but also it's half high PE, high momentum from 2024, which is your car sales, your REAs, and a few other things. So that's the bit that's causing that to look bad. Utilities is defensive, it's okay. And then the All Ords there. Let us head over to the base metals, where we have seen some action since our last update, and mainly in the forms of losses, as really just markets here succumb, or I guess transition from some positivity in front-running various new tariffs that are coming in, to succumbing to the realisation that those tariffs probably will cause a global recession. I think we're kind of getting closer to that. Realisation is not the right word, but past the point of no return, point of despair. What's the right phrase there that I'm looking for? Nickel was actually up a little bit, led down. Tin, I haven't seen that chart since last week. That looks amazing. Zinc is going down. So with the exception really of tin, maybe you MetalsX shareholders out there will look at that with some interest. Things aren't looking too good. And this is the lithium carbonate price here is continuing to look awful from a long and short-term trend perspective. Let us head over to the trading view screen where we have our other charts for macro. Starting with silver. Silver's fine, but it's no gold. Let's just say that. Isn't that amazing? What a wonderful that chart that is. And, this is, again, another reason why we have the ability to be long 1/3, because even in the worst bear markets, there are still stocks that will thrive in whatever macro environment is causing that bear market. And you're probably laden with gold stocks at the moment. They didn't do too bad today, I think, all things considered. And that gold price is going gangbusters. And to be fair, I have put in front of you many times over the last 12 months the gold ETF, which continues to look good, made tonight's a feature uptrend at least. Copper futures, no surprise probably for most of us that they are putting in that reversal, and it's not, you can't say, oh well, they're coming down now and I didn't see that coming. I mean, that from that candle there we saw it coming because it was such a clear exhibition of supply in the market, and the rest is just follow through. Iron ore is going nowhere, so that's not a bad thing. And uranium also seems to be pretty steady. Natural gas in the US is holding fairly firm. US crude oil has also firmed, and Brent crude has firmed somewhat as well. Much of that's still also, I think, to do with tariffs. Coal, thermal coal, still in a very well-established long and short-term downtrend set there, as is metallurgical coke and coal. Let's head over to the all-important bonds. And did I tweet that chart? I think I tweeted that chart also this morning. And if I figure out what I'm doing here, it will happen for me. We're going to bonds, and we're going to look at the US 10s, which that was Friday's candle. Again, it is just this growing buzz rhetoric around at least a US recession is inevitable. And that's caused that big drop on Friday, which we have talked for the last few weeks about the fact that big falls here are not good for stocks. You knew that already, and that was a big fall. And then today's candle is actually gapping down. We do have US stock futures down about 0.5%-ish, depending on which one you're looking at. If we see this continue to fall, it will continue to be bad. And this could actually resemble the Nasdaq chart as well, where we end up trading in the high 3.7s maybe. 3.7s, 3.8s, somewhere towards this low. Whether we get there or not, I don't know. But if we do trade down there, it is forecasting, a few interest rate cuts fairly quickly from the Federal Reserve, and the Federal Reserve is only going to do that if the what is hitting the fan. And that is the environment, ladies and gentlemen, in which we are operating. But hey, don't look so sad. It's not. It's okay. If you follow the model, you're mostly in cash right now, and that's a great place to be, but you're still getting a return. Let us head now back to Amy Broker, where we're going to do your requests, aren't we? And we'll start with the offline requests. First, bear with me if you're online. I will get to you, as I always do, and answer everybody's questions before we leave. Let us start with remembering where I need to go, and it's there. We're going to go to Lee, and Lee's got EOL. Which I can't remember where I covered it. Maybe it was here, maybe it was here. For me, it's compulsory to buy big moves, big white candles. It took, and I don't mind sort of working through them a little bit. Sometimes it takes a little bit of time to work through the supply that naturally comes from that. So people's brains get blown from, it's 7, now it's 10, it means I have to sell. Not everybody thinks like that. That's why it hasn't gone down. That's why it didn't go straight up, straight down. We see that from time to time. They're the ones that are unsustainable, okay? The ones that go up and hang around up there, notice it actually pretty much hung around $10, which is really impressive when you think about it. Sort of respecting the round number, but now turning that round number or transitioning that round number from something that is feared and well, not feared, but we'll want to sell there to somewhere where actually we're finding demand side support there, and we're creeping up. So I think this looks great. I know I ran it there. I'm pretty sure I ran it there as well, and maybe even there. But definitely ran it there a few days ago. It didn't make it in tonight's list because of the upward pointing shadows there, but they're minor. It just means it's not it's not perfect for today, and I only want to put the perfect ones in. But otherwise, this one is very easy. Thank you for giving me an easy one to start off with. That's not always the case. And we just say FRP, which stands for forward position. That just means if you own it, hold on to what you've got. That's all it means. And if you don't have it, I'm happy to add, a third of a unit of risk to the trade. And I guess there's probably some confusion as to what a third of a unit of risk is. I think most of you probably doing pretty well in putting in a small amount and then building that up. But we are probably overdue for a session on actually how all of this stuff works. It's just about finding the time. Let's go not far away from EOS actually, and I probably can. Yeah, there you go. Go to the next one because this is the next request from Mick, which is EOL now to EOS, and it looks like we've done a ton of work on this recently, haven't we? And I want to say that not long ago, because of where the candles are drawn, probably last week, I said something to you like, looks okay. Look, it's a turnaround setup. I get it. I understand why you're looking at it. Because we have if we're looking at certainly this white candle here, we have an orange and amber long-term trend. So the turnaround setups are about getting in when there's not a downtrend. Okay, well, I guess it's not yet an uptrend either, is it? But anyway, we've got at least a neutral trend, but we do have a short-term uptrend. We do have rising peaks and troughs. We do have a predominance of white candles. If we've got a base pattern, it's a bonus. It's a very, very powerful bonus. And if in that base pattern we've had volume and volatility spikes along the way, punctuated at V-shaped bottoms, that's also very handy. So yes, I agreed with you last week that this was a turnaround setup, and that candle actually was quite a strong one, a little bit of an upper shadow, but not surprising given the proximity of the candle to that point of supply, an important point of supply. But having said all of that and acknowledged all of that, I'm pretty sure I said something like, well, give me a dink, all right? Just let me see a dink at this point of supply, how the market responds to the supply there, because it's not a clear, it's not a really clear-cut strong one in that there's plenty of supply in the past as well, okay? So we just want to let it prove itself to us a little bit more. And I probably drew this candle on here saying this is the kind of candle you want to see, okay, to make that happen. Okay, so let me just move that away from me so we can see what actually happened. We ended up with this candle here, which almost actually pushed through. Look at that. It actually pushed through the point of supply, hit 150. Look, not a particularly important round number at all, and it's not our first rodeo there, but it does show that there are or were investors in the system looking at 150 as a point as where they wanted to get out. They've been waiting patiently for 6 months to do that, and they took that opportunity in spades. We can see the significantly above average volume on that day and significantly above average volatility. We can see that that there was a huge buying push at the start of that day. At one point in that day, that was a big white candle, and then as the sellers came in, that created that shadow. So that actually kind of kills this setup for me. Like, I would look at that and say, I don't think we need to pay much attention to this for a very long period of time. I can't see it coming out of that unscathed. And then we ended up with that candle, and that candle. So nothing is surprising me about that. It's a long way from a dink. It's a long way, I think, from qualifying to have some of our capital, some of our risk, especially in the environment that we're in. And it does highlight, I guess, how cautious I am sometimes with these turnaround subs, because we are moving from an environment of supply side control to equilibrium, and the demand side really should prove to us that it is in control before we take steps to enter. Okay, so what do we do with this now? Well, if I had it, I'd be a bit concerned actually. I don't think I'd want to own it right now, to be honest. I'd rather just be flat and out of a lot of things and have fewer headaches than something like this. If I didn't have it, I'm not looking to buy it either. Okay, so maybe feeling a little bit vindicated by my skepticism of this one last week, but hopefully you were patient as well and still looking, Mick. But maybe not, because actually if I read Mick's email, he's saying -1/3 question mark, and I think I've answered that. I just don't feel I want the headache of mucking around with this. If it starts to look good again, I'm always happy to get in. But I feel that by the time this looks good again, I've probably got 10 better setups and even 10 better turnaround plays. I think we're messing with Mr. In Between here. Imricor Systems last week, again, we get the candles we get, and I reckon it was probably that candle there, perhaps, looking quite good. I think a very specky sort of +1/3. I'm not sure what I said last week, but it is a bit of a specky 1/3 on the basis that it has, it has the pedigree. It hasn't really turned out. I mean, that's a great candle. That looks very good. I might have even run it on that day, I think. But then, broader market gyrations, unfortunately, have got the best of it. And I think, because written here, question mark, is it just a bad day? And I think, it is a function of both of them really, just not being able to cut it in the market that we've had. And I don't think you can really blame yourself too much. I think we are, unfortunately, a little bit of a victim of circumstance here. So that's happened. We put that behind us and we say, what do we do now? I mean, that's always the key question. And then what do we do now is, this is equilibrium at best, isn't it, right now? So if you didn't have it, you certainly wouldn't be looking to buy it. You've got 3 black candles. If you did have it, again, I'm leaning towards just being flat and out of stuff that isn't impeccably perfect. And you could hold it if you wanted to see if maybe the market turns around and this starts to demonstrate some of its recent relative strength. You can use that trough for a potential final exit, a give-up point, or a more conservative one would be down there. But I think I'm inclined, as I've said about 10 times already, just to be clear of some of these things that just look like it could be a week, it could be a month, it could be indefinite before they start to pick up again. And I'm not just saying that for no reason. I'm saying that because we've got some decent supply side showings there now. Let's go to Peter's got SX2, which is not that one, and it might not actually be in that list because it's quite new. SX2, there it is there. $5, I think. You probably would have had to have sold a few anyway, just from the fact that that's our rule. So on this day here, and you can always either put your order in. I often say put it in 1% beneath $5, so that'd be like $4.95. Take some money off the table there. Or if you were otherwise inclined, and you saw it on that day, with a big upper shadow, and you say, oh well, I'm getting a bit better than $5. That's pretty good. Either way, that is the rule we have. So minus 1/3 there, which is the basis of the round number. Do not pass go, do not collect, or do collect your $200 or whatever it is you put in there. Now, what do we do with the rest of it? The rest of it is we're just waiting to add that back, really. Hopefully, that's what occurs. And that's not a terrible candle. That's not a species-ending event. Even when combining it with that, it's still not that bad because there's the lower pointing shadow there. Even this one that's coming down with the rest of the market on an awful day, there's still plenty of demand in the system for this thing. If we compare this to the last one, and in fact the last two, where I said, look, they just feel too hard for me. This one, I'm actually a bit more encouraged with. I'd actually give this one a bit more leeway. And we've got some off the table anyway. I think you could use today's downward pointing shadow as a point of demand, really. I mean, there's nothing else that you could use in terms of points of demand, so in terms of peaks and troughs, right? We can't. There just isn't. So you have to find a practical way of doing this objectively, because the last trough, no kidding, is literally down here. That's the last trough. And we're not going to wait till all the way down there. The trend has changed by the time it's got there. So a couple of supply side showings, a bigger one there, I think warrants. And I've always said this is not a black box system, this is a common sense system. And I think a close beneath here, and this is all we're talking about, ladies and gentlemen, is another -1/3. That's the way I would play this. And I'd look at the candle there and decide whether I would go a final third. But otherwise, I should also write on the screen FRP for what we have, because I don't think this one is anywhere near as uncertain as the ones we've looked at up to this point for you, Peter. And hopefully it's clear why that's the case, not just making this stuff up as I go along. Look, nothing to worry about here as well, as if to extend this idea that there is still plenty of demand in the system. Yes, there's some supply working its way in. Of course there has to be, given today's circumstances, if only because some traders are taking losses elsewhere and this is the only thing that's making them money, and they want to take a bit of profit off the table so they don't lose it and they make themselves feel a bit better about their losses. I know you've never done anything like that. But really, the way we should be looking at this is that there's no reason for us to be on the supply side at this stage, because we're double green. We're still white candles. Even today was a white candle. It was only flat on the day, but there was still more demand in today's candle than there was supply. Okay, so I think that's important too. So FRP, obviously I'm not a buyer because the last candle doesn't warrant it, even though the one before that did. But happy to hold the risk that we have here. Peter. Plus 1/3, I think I've answered that question. I think I've answered the question on the last one as well. Peter, I think this is the first time it's happened in a very long time, has asked about this one for a short. Now, if you're in it, I think you can stay there. I think you'd be tearing your hair out because it barely did anything to the downside today. But as one of those high PE, no PE stocks, they can get a bit of a lift when those yields do fall. I think there are better shorts out there. So if you don't have any position here, then my answer is, for me, no. I wouldn't be looking to short this one. I'd be looking to short any one of the 58 feature charts I put in as shorts for tomorrow. 58. It's a record. It's never happened before. It is a sign of the times. But there you go. I mean, to be fair, if we look at how the ratio, there were 10 feature longs and 58 feature shorts. So the first time that's ever happened, nearly 6-1. But if I look at an average of the number of feature shorts to feature longs since the start of the year, I want to say they're at least even. But my gut says that they've actually been slightly more. And certainly today's going to skew the average. But I reckon a quarter, a third, a quarter. Let's say a quarter more shorts as features than there have been as longs. And that's telling you quite a bit as to sort of the underlying fundamentals, demand supply fundamentals of this market, when there actually have been more feature shorts than longs. And this is not for me to sort of say, well, there have been some good trades here, but there have been some good trades, because that doesn't help you who haven't done anything. Now, this is a really interesting one, because what does that look like? That looks like the Nasdaq, looks like the ASX 200. That looks like the opposite of a turnaround setup for a long, doesn't it? Ampol, well, that one's well established, just breaking down. AMP looks like a turnaround setup, and hopefully you can see in these charts why they're there. That's BHP. I wanted to look at that one today, didn't I? I said it's teetering, and that's what the resources sector looks like. Credit Corp, Champion Iron. Look at some of these candles at the end. CSL, Corporate Travel Management, I think just squeaking in today. I know it's a fairly neutral trend, but a big move today. Was that Cettire? That's been in the list dozens of times. So is that one dozens of times. It's made this list. Domino's Pizza, I'm going to say order of magnitude 40 times it's been in the list. Endeavour, at least 20 times. Elders, 15 to 20 times. Fortescue, probably a dozen times. Goodman's been in, I want to say I put it in on this day here. So short at 33. It's now 28. I don't know what that is in percentage terms, but it's a decent turn, if only to pay for some of your losses on the long side. HLO's been there for a long time. HMC Capital, I reckon I put it in on this day here. So 850 to 650. What is that in percentage terms if you were long? Taking something from, 630 to 850. You'd say that was a great trade. And these have been features, not just rank and file features. RGO's been there so many times. Aluka's been in there, I want to say 20 or 30 times order of magnitude. IPL's been in there a few times. Johns Link Group has been in there dozens and dozens of times. Lendlease fairly new, as is the trend. Levisa's been in there quite a few times recently. Liontown, of course. Macquarie Telecom, I reckon I put it in on that day there, if I'm not mistaken. MFG, I reckon I put it in probably on that day there. Macquarie went in on that day there. NHC went in probably on that day there. And we could keep going, but there's 58 of them, so no point. And they're all going to start to look the same. There's my beloved Pilbara Minerals as well. But I think there's some value in looking through those, if only to understand the shapes of the charts and how well some of these trends have actually persisted. Let us go, but thank you for your question about the short, Peter, because I'm glad to hear that somebody is thinking about it. APA, and ironically, we are going to look at another long, and double ironically, we're going to look at a long that is actually setting up for a really nice turnaround play. And I had AP in as a short trade. I mean, go check. Well, I would have started there. I reckon I had it in there. If not, certainly there. There or certainly around here. And they're all on the internet. and I have some records here I could check for you. Certainly there it went in as a feature chart. Certainly there it went in as a feature chart. Probably there as a feature chart. Probably there. So you can see how many times it went as the short. And then on that candle, I think we might have even looked at it here. It's like, okay, well now we're thinking longs, and I reckon I ran it as a feature there. I know I ran it as a feature there. I know I ran it as a feature there. And I know I ran it as recently as a feature there. And it just really should prove to everybody, like, one thing that you don't need to worry about, there's lots of things you need to worry about. The one thing you don't need to worry about is this bit. Like, who cares? Hopefully this just shows how irrelevant this thing is and what it does. It's meaningless. You are just trading pixels. Some pixels are black, some pixels are white, some pixels are green, some pixels are orange, some pixels are pink, ladies and gentlemen. So to answer your question, Davis, I'm FRP here. I don't need to add any risk based upon today's candle because it doesn't warrant it. Force of habit. But yeah, next high close. That's what I should write actually here. Let's go next high close. Even though the market is rubbish, I still want to have a third. I can have. I want to have some risk, but I can have up to a third, and I want to fill them with the best setups as possible. And I think this is a far stronger setup. If we check out, because I don't want to leave, like EOS hanging. So if we put that into perspective compared to, say, APA, and don't get me wrong, I said EOS was definitely a valid bona fide setup, but I just think that one's so much stronger because of this move here and then the shallowness of that pullback. They're the ones I really will favour. REE is not ringing a bell. Oh, Rarex. Okay, yeah, I have seen this in the scans. I haven't run it as a feature chart because it hasn't really dinked enough for me yet. Got close to it today, actually. I mean, if today was a high close, I would have run it. There's a little bit of a dink in here. Not an official dink because there's no lower lows and lower highs, but sometimes you don't get them. I think this is one to watch. I don't mind it. Not taking a trade based upon today's candle for obvious reasons. Upward pointing shadow indicates excess supply lurking in the system, but it was an awful day and it still did pretty well. But certainly next high close, I can have a crack at this. Whether it's a sixth or a third or whatever you want to do, that's the order of magnitude that we're looking at here. It's a punt on a stock which doesn't care. Let's face it, does Rarex care what El Presidente says next? It doesn't. And that's kind of neat as well. Think about that concept for a second. These little specky ones, generally they don't care what's going on in the world. They're going to do their own thing. And that's actually a refreshing change. This one doesn't seem to care what's going on in the world. When did I first put this in? Somebody maybe send me a message as to when you first saw this in my list. Some down here, somewhere down here. Oh, God knows how many times I've put this in. It would have to be up there with one of the most run features. There would have been periods of time where we ended up flat, no doubt, and then started to get back in again. Today, is $6 a big round number? No, $6 isn't a round number. You probably would have taken some off the table at $5. You're probably regretting that decision. I think I ran it on that day. So you might have got back in on that day. I think you've got enough of this. Okay, FRP. And I know that's a good candle. Let's just say FRP on this one for now. Next little dink, next little pullback. It'll just give us a better stop loss level, but happy with an FRP for there. And that might be a little bit counterintuitive. Say, Carl, I ran it in the broad list, but it didn't get a feature just because of that little upper shadow there and maybe a little bit of supply to be found at $6 because it has spent quite a bit of time at 3. Okay, so the people that got in at 3, for them, $6 is double their money, and they just might find some reasons to supply there. So don't get me wrong, Adonis. I think it is a picture of absolute beauty. I mean, this is the sort of chart you dream of having, and you must hold it. This is the thing. I know I can't tell you what to do, ladies and gentlemen, but I'm telling you, you must hold on to these as best you can. ASIC and their regulations be damned, okay? Somebody wants to go and report me to ASIC. Carl told me to hold charts like this as long as I can, okay? I'm prepared to cop the consequences. But these are the ones that make you year, okay? And my model, it requires you to hold on. That's the thing. That's it for Aussie ones. Offline, I want to talk about, before I do online, I'll do online requests because you're very patient, but there are a couple of really interesting general questions tonight as well. Avant's got, hi Carl, can I get your thoughts on A1M and IMR? A1M obviously being one of those copper stocks. We know copper did well and then tanked, unfortunately, and this one has been caught in the downdraft. And frustratingly, was actually looking pretty good. And I certainly ran this, and I will own the fact that I ran it, I think, on that day there. And I'm not sure, definitely that day, yes, that day there, without a doubt. And probably that day there, the 2 times I ran it. And if you're losing money, then you're also losing money if you took it on my recommendation because of me, okay? But I don't know the future, unfortunately, and I stand by both of those setups. And again, we have to take them on the basis that the trend appears to be turning around. We appear to be moving towards a demand-side market. Plenty of supply removal on the volume. It actually looks pretty decent here. Actually, I'm not supposed to be here, but I'm drawing in the wrong places. I only came here to do that list because I knew it didn't have any stuff in it. Now I've put stuff in places that aren't supposed to be. So let me just go back to this one where we have drawings. Yeah, look, I mean, that's a really old point of supply, isn't it? So that's no longer valid. So I can take that off. It just goes to show how long it's been since we actually looked at this one. There is a point of, let me put that back because the point of supply now that's relevant is over here. And we should get rid of some of this stuff because I can't see it. Look at that. I wonder what happened there all that time ago. Question marks. So that's the point of supply, which from here I don't think it bothers me too much. There's a little bit of room to work our way into there. To answer your question, what do we do now? I've got 2 decent black candles. I've closed beneath that point of demand. Only the long-term trend ribbon is helping me now. And given the severity of today's close, it doesn't look good. And I just think, much like a few others, I'm prepared to take my lickings on this one and move on. And that's just me. You can do whatever you need to do. But, yeah, I think close below, unfortunately, is going to be a ZRP on this one. Because we're lower peaks, lower troughs already. We've actually already closed beneath this point of demand. So today's actually your minus third already. And if you haven't done it, then this becomes relevant here. And I feel your frustration, I feel your pain because there are several, obviously, other copper plays that did it. And again, a reminder to try and spread your risk a little bit across some of the themes that are decent at any one point in time. Let us go to IMR, which I think we actually talked about, which again is probably more of a flat thing. There's a couple of levels there. We have discussed that one. I'm just trying to remember. We have done it. Adonis, I've done your CYL. Let's do your EVN. And again, it shows the value, doesn't it, of holding these trends. They have to start somewhere, and we were hoping that A1M would be the start of it. We know that something like IMR is very much potentially in the middle of this. But it does show that if you can get them, you have to hold them because it'll make up for quite a few IMRs, EOSs, and the like. There's nothing here that I can see, Adonis, that would tell me that I need to sell this. Is there anything that you can see in this chart that would tell you to sell it? We have looked at the gold chart. Obviously, we know that that's doing well. We know that gold stocks pull back today, not because of the gold price, simply because that the Aussie market pulled back today and there was some baby and bathwater stuff going on. But otherwise, this is a picture of excess demand. I cannot fault it, and therefore I cannot sell it. I must also, therefore, continue to own it. So we are FRP on that one. Obviously not adding risk, but we can say next high close. We could. Next high close plus 1/3 on that one. The gold will go the way of everything else at some stage. Like gold will eventually reach a period of equilibrium. It will then break down. It will then change trend, and gold stocks will be the worst things you could possibly own. It will happen. The good news is we'll be out well before then. Let us go. Adonis has got a few here, a bit cheeky. Let's do them quickly then. CNP, great for a short. So he's talking about shorts here, I think. Oh no, that's a US one, but we found one for a short perhaps here, and I'll do those later for you. Adonis, let's go to APZ. Yes. Wonderful, Michael. Great thinking. Let me show you something that will please you. This was my short list of longs today, feature charts. And again, I'm going to go here at risk of making a mistake and drawing in the wrong place. But these were my 10 stocks. Only 10 that I thought were features today that I would happily put my own money on if we were looking, or if I was looking to add risk, if I was, okay. Now, we've got Alkane. Yes, there's a point of supply there, but it closed with such a flourish And there's a little bit of a dink here as well. I don't think that's a worry anymore. And given the broader day, and you can see the relative strength comparative because of today's black candle on the ASX, and the white candle here has gone bananas, and the volume as well. We have actually removed a bunch of supply here. So there's a lot of support for this one today. So plus 1/3 there. Aspen, that's your one, Michael. So as I said, you'd be pleased to see that I also agree with you on that. It might be a bit, this one looks a bit slow and steady. Let's look at the price action. Okay, so if I was choosing between these 10 again to narrow the list, I'm not sure this would actually get my money if I was only allowed to buy 2, for example. Because it is a bit overlapping the price action. Let's keep going. Let's see if there's something a bit cleaner. I think that's a bit cleaner. Okay, more white candles, price action's a bit more separated, AZY. BBOZ, there you go. Now, don't forget, if you're buying this, you're actually going short the market. So I also ran this a little while ago. So I reckon I ran it there because I just wanted to get some skin in the game on this one, on a pullback, or maybe it was there on that basis, knowing that it probably could go down a bit before you get your next signal. But there it is. Commonwealth Bank, as one of those sort of established long-term trend setups, and you can see we actually went back to green today. So I think that's interesting. Back to amber on the short-term trend. We've done a little dink. So this long-term trend ribbon is back to acting as dynamic demand. I think it's a really specky one. But if the market is going to improve, and that's always a possibility, then I think that's a good place to be. Let's go zoom normal, and of course, silver. That's all precious metals, it seems. So that's going very well. There's gold, the OG, RRL. Can't argue with that. And this one as a pure specky turnaround play with a couple of white candles there. Just putting a little bit of cash on that one potentially. But understanding the risks, and we've done those. So that hopefully answers your question about APZ and a few others. MEK for you, Michael, got very, very close to getting in the list. And I was really pedantic today on the basis that, it had to close on its high today, or it didn't make the feature list. I think you'll agree that that's a good place to be. So that one, very, very pedantic. Otherwise, if it closed on the high, it would have been in the feature list. It is still very, very good, as in it is a very, very strong showing of demand side control. So I totally, wholeheartedly agree with you on that one. I better stop being in there because I'm going to end up drawing in the wrong place. And what I can do here, that's even better, is go copy and paste for you there. Michael, happy with that one. Happy plus 1/3. MLX, I also saw that today, but the candle wasn't sufficient enough to warrant. There was some selling. As good as that 10 chart was, okay, there was plenty of selling into that move today. We can see almost double the average volume. So that does concern me. That means there is supply lurking, lying in wait to sell the strength here. And the reason why they do that is they're big. Okay, they're big and they want to get out at a good price. And the best way to do that is when everybody's buying, because tin's going up. And they can move a lot of stock in a day like that. And that's what the volume's telling you. So a little more cautious on that one. Definitely not adding risk here, but happy to see how it's going, how it goes, and running with the risk that I have. Amber's got AUE, which up until today was looking good. I don't know what to make of that candle, honestly. I don't know. I've got no words. It is not a great candle, taking out the last couple of days. I mean, what can I say? That's a setup there. It's a bona fide turnaround setup. In fact, you'd almost call it a continuation turnaround setup, like Commonwealth Bank. I'm happy on the basis of everything else to give it one more day. It's not breaking any points of demand. That's the next point of demand. And certainly beneath there, because we're going to be beneath short long-term trend ribbons, static point of demand, then we would close below. And I think you're probably more than a third. Let's just go, minus a third, and just put minus a third, and put ... question mark 2/3 on that one. We'd have to see what the candle is when we get there. Not much more I can add on that one, unfortunately, Amber. NHF, though, I still think looks pretty good. And this is like APA. I had this as a short several times on the way down, but I just think it looks incredibly strong now. And it held up really well today. That's impressive. And once again, we can see just how powerful that pattern is. That big pop, shallow pullback, move higher. That's when you want to get on. Happy with that one. Let's annotate it so when we come back next time, we'll know what we thought about it. +1. Well, I don't mind. You actually could go +1/3, but let's just say next high close +1/3 on that one. Thank you for those two, Amber. Going to, we'll stop putting any more in. Robert's got the last one there at APA, then we'll head back up. BC8, still fine, I think, for you there, Brett, but you had some work to do today, no doubt, didn't you? What was the high there? 98.5. So maybe you got some off the table, maybe you didn't. Whether you went at 99. Oh no, 99.5. Oh well, then you did. So there you go. So what did I do? Plus FRP +1/3. Okay, what did I say? If it's in the shadow of $1, it'll get there. I honestly can't recall. I hope on that day I said it's close to $1. I may have just missed the fact. But we're doing -1/3 for the round number. But absolutely 100%. There's no reason at all to do anything but FRP on what we've got. And obviously we're not adding a third yet. We'd wait for a dink. So something that resembled probably something like that. And then we'd be looking for next high close somewhere in that phase there. Okay. But that's a ways off potentially. Let us go to LGM. I think is that your next one? Oh, okay, bit of a turnaround play here. Let's go zoom normal, get a bit more of a bigger picture. Look, yes, I don't mind it. It's a little bit like the EOS one where there's quite a bit of supply sort of lurking in around here that we are just starting to interact with. And therefore, yeah, I'm not sure if I like that as much as some of the other ones. But if you wanted to have a crack at it, I wouldn't complain. It does look like it's meeting most of the criteria. It is very sketchy. You can see how many days here where it trades open, high, low, close at the same price. So it is a sketchorama. Okay, and if you're going into these eyes wide open, knowing that you could lose quite quickly, then it's okay with me. But it's not one that I would gravitate towards. Peter, I think I did your SXE, did I not? It might be different, Peter. I can't remember. Actually, I think it is different, Peter. That's Peter B. This is Peter M here. So let's do SXE. It definitely came up on the list today. I shortlisted it, but I didn't run it as a feature because you know what I'm going to say next. All of this is good, but let us just have a dink first. So let us see if we can't get some sort of supply side response coming in, see that the demand side is more than up to the challenge, and then look at it for an entry. I think that's what I want to see here. But otherwise, yes, if this is the one you felt was the one you wanted to hit up for tomorrow, all things considered, in the current market environment, I don't mind. But I question whether it is, whether that's a valid statement. DBI is still fine. Today's price action, not ideal, but certainly much better than several charts we saw today that looked good and copped it. I mean, this looked good before, didn't cop it, and the others looked good and copped it. So happy holder here, nothing all that sinister going on, FRP, but obviously not adding a third for obvious reasons. We've done CYL 20 times. Roscoe saying it's been featured 20 times while he's been watching, so that is great confirmation there that it has been around. Peter M again is a US one. We'll do that a little bit later on. Carl, your thoughts on buying ASX ETF BBUS as a way to short the market? What did I just show you? I think it was it BBUS or BBOZ? I can't recall. I can tell you, it's not hard to find. It's in the longs. It's in the longs. BBOZ. Yes, BBUS also come up on the list, and for whatever reason, I just thought this one looked a little bit better. But they both came up on the list. So it's up to you. BBUS, right? BBOZ. I just felt that one was a bit more developed. Does that make sense? BBUS. So that's a bit more coming out of its turnaround. The other one seems a bit more developed. For whatever reason, they're doing the same thing. And I just applied my traditional, technical analysis eye to it. But yes, the same thing. Same, but different. Let's go to, yes, that is, of course, one's the US market, isn't it? So, of course, they're going to look different. I think the BBOZ was the Aussie one, wasn't it? BBOZ, Oz, of course it is. There you go. Of course, yes. I should have, you know what? I just thought, short ETF, I'll just pick one. I should have actually run them both because they're doing, one's US, one's Australia. Do you go do them both? I'm not sure if that's wise. Pick one and maybe some individual stock trades as well. Let's go. Otherwise, you're overloading, but you have your limits as well. So there you go. EVN looks good. APE minus 2/3, says Robert. I think it's 2/3 is a little bit heavy-handed, but I can see why. And again, it's another otherwise just rock solid. It was so good. That is unfortunately succumbing to the broader market conditions. And it actually had tipped a new high there, I think. Certainly multi-year high. So that is annoying, to say the least. But 2/3 is probably heavy-handed. I can see there's no peak trough move here. So this is just one move in terms of short-term downtrend. And, we haven't made lower troughs because that's the last one there. That's the so this is the level. So I totally agree. But beneath here, yes, I can get to 2/3 here because we're beneath the short-term uptrend ribbon and we're beneath two clear points of demand. I mean, if you wanted to go, I'd go even question mark, zero risk position there. But just now, what are your triggers? And I'm not sure I see them. I get it. I know you're nervous. I'd be nervous too. That's not a great candle, and today was a horrible follow through, but the market was kind of rubbish. So anyway, that's what I think about it. If let me say, no objections to to minus 1/3 immediately if that makes you feel better, and then you can see where the other points of demand are. Oh, but Carl, the market's crashing. This is guaranteed to go down. Well, nothing's guaranteed. The market could rally tomorrow, and this will go back to it. You can see the pedigree there. So we don't know the future, unfortunately. I wish did, but I don't. I want to do. It's 8 o'clock. Not too bad. Okay. I've got a question here about moving average ribbons. I can't remember who it's from. I didn't do it last week and I forgot, so I apologise if this is you. A question about moving average ribbons and the significance of the width or the height, I guess, the separation of the ribbons. Do they get wider the longer the trend is in place? Kind of. They're going to get wider if the short-term trend or long-term trend, so whichever trend we're measuring, is accelerating, expanding, increasing at an increasing rate. That's what accelerating is, isn't it? Literally the definition of acceleration. And then they will go more parallel when we're moving up at a constant rate. They will start to contract when we're moving up. We're still moving up, but at a slower rate. Think about that. And then as the short-term trend starts to become flat or sideways, they will obviously contract. They may cross. And as the short-term trend begins to fall, then they will turn and roll over and do the same thing heading the other way. Okay. So, for example, in here, the long-term downtrend is accelerating. In here, it's roughly constant, or the movement to the downside is roughly constant. Here, it's decelerating. Here, it's decelerating. Here now, the short-term uptrend, I guess you could say, is accelerating, and then accelerating, and then accelerating. And same thing for the short-term downtrend. Hopefully that answers that question. So they are giving you, I guess, for me, it's an indication of the health of the trend. I like to see expanding moving averages when I can. Sanjay's got a question about the optimised true range. And otherwise you could use average true range. Doesn't matter if you don't have it. You probably have it because I gave you the indicator. But optimised true range is effectively the average true range, but it places more importance on things like gaps than the other one does. So the question is, what is the significance of the height? Do we get in? Do we enter on high or low optimized true range? We're talking about the red bars here, okay? And the answer is it's not relevant whether it's high or low. You could enter in either scenario. So you could have a very low. I want to go to something. I'm going to go to CYL because it's going to just be easy for me to find case studies. Okay, I know I'm going to find them here. So we could have a day in trend where I might run it as a feature, like that day there, where we have relatively low volatility. I'm hoping that one there. Yes, good. Yes, good. So in trend, fairly boring, predictable day, and therefore low volatility. But a day, nonetheless, that closes very near its high in trend, and really you look at that candle, there's only one thing you can do, and that's add risk, and it happens to be a below average volatility day. But we might also have a very high volatility day where it closes on the high, and that day equally is a no-brainer. It is like compulsory, as you know, under my model. That is a compulsory buy. That is drop everything you're doing, take money from anywhere you had it, and compulsory buy. Okay, but look at the OTR on that day; it's massive. So no, the OTR is not relevant in that context. It's not relevant at our point of entry necessarily. It could be relevant for our point of exit. By that, we are more concerned about big blow-off days, like that. Look at the OTR on that day, okay, because they're big signals to get out. I think that answers the question. Okay, let's keep going with US now. We're going to head over to the trading view screen, and we've probably got maybe 5 or 10 minutes at the most to go. Ladies and gentlemen, we're going to go offline first with Adonis's AXP. Sorry, I couldn't get to this last week for Adonis, but we'll do it this week. AXP, American Express Company. And I think you're asking about it for a turnaround play, which probably last week might have been looking that way. It wasn't there yet because it had to get itself out of the long-term trend ribbon, which was amber at the time. So the answer I would have given you at the time is not yet. It still needed some cooking, and it still needs some cooking now. I'd be a bit concerned about this potentially. As you know, we've talked a lot about these turnaround setups heading down, and if this was to break, say, 252, then this would be setting up for a short, not a long. So I actually think this is closer to a short than long at this stage. Let us go to, that's it for offlines. Let's go onlines. Peter's got AGI, which is Alamos Gold. Yep. So if you don't have enough choice, Peter, of gold stocks on the ASX, then head to the US and find some over there. Is that the motto? Yes. Looks perfectly wonderful. No complaints. Double greens. Great price action, like impeccable price action. It almost looks like the gold ETF, doesn't it? Friday's candle was not ideal, but don't forget the US market crapped itself on Friday, so that's not a surprise. So this one's pretty straightforward. Let me just double check there's nothing sinister out the back there that could cause us problems, and it's not the case when we go to the weekly chart, and therefore we just go FRP if you've got it, and plus 130 if you don't. However, there's probably hundreds of gold stocks out there. Just make sure you've got the best one. That's all. But if this is the one you feel is the best, then it's yes, no problems for me. No, I don't want to I don't want to do plus 130 just yet. Next high close. We're going to go there. Okay. Let's click save, and we'll go further up the list now to Adonis. Had a CNP, Centerpoint Energy. Interesting. Yes, I want to tell you, but I wonder if this is a utility stock, Adonis, because it's not trading like an oil stock, is it? Well, having said that, I haven't been watching US oil stocks all that much. So let's check out Excellent. It's not that bad compared to our Woodside. Our Woodside's terrible. So there you go. That's what about CVX? Chevron. Well, is that? I wasn't expecting that. That looks very, very good. I used to know all of these. Not as active over there anymore. Marathon Oil. MO. What's that one? I can't remember. Marathon Oil. There it is. Petroleum. Oh, well, that one's going the other way. That looks more like Woodside. Anyway, I just wanted to get a bit of a sort of sector view there. So some are good, some are bad. Your one looks good, CNP. And I said, I wonder if it's a utility as a result of that. Is it doing better? And yes, this is a great trend. Absolutely wonderful. No complaints at all. Looks even better there. And I know we are still banging away, aren't we? And a predictable theme, which is what can we buy in this cascading market, ladies and gentlemen? But why not? Why not? No objections, FRP plus 1/3, because it is the picture of excess demand. And therefore it warrants risk if you've got room in your cap to do so. But this is an important service that Adonis and everybody else who contributes is giving us, because they're finding good stuff that maybe you might not have found if you are looking for risk. And this is just as good, Adonis, if not better. I think this is the best one you've shown me today. Let's go back to the weekly chart, and that's knocking my socks off. So this is kind of Perry sort of US stock stuff, isn't it? Let's go FRP plus 1/3 on this one as well. Sheer perfection, HCI Group. And you've got KGEI, and one more after this, Colibri Global Energy, another energy stock. Okay, not as exciting for me as some of the other ones, because we are sort of in this sort of volatile downward phase here. But it's putting up some real fight. I'm not just saying that. This is an amazing candle. I mean, this in itself, you could almost warrants buying it. I'm disappointed that this one didn't follow through, but Friday's candle is as good as, I think, a follow through. I'm still concerned about all these black candles though, and that's what would put me off. It's one of those where I go, look, if this is one you really love, for whatever reason you've done the research or you like the story, I can see why you do it. It's not for me, okay? Because I think I'm still worried about those black candles. Maybe even another little dink in here sort of thing, just to see how the supply side is responding to this rally. Are they looking at that rally as an opportunity to get out at better prices, or are they really having very little impact, and the demand side so strong that it's forcing that next trough higher? But a speculative entry now, I wouldn't disagree with, but I would question whether this is the best one we can find. That's all. Let's click save on that one also, and then your final one, which I'm curious, VLG, that's a lot of letters, VLGA, GEA, Village Supermarket, a 5-letter ticker code. Oof. Oh, I like that one. Let's go back to the weekly chart. Magic, can't complain. Supermarkets, very defensive. We talked earlier about sectors that will do well in any market condition, and supermarkets often fit that bill, and they tend to prosper because funds still have to buy something. The cash is still rolling in from investors, so they have to place it somewhere, so they tend to gravitate towards these more defensive type sectors. This is a very good chart. I can't fault this one, FRP, whereas I was a little bit skeptical maybe on the previous one. This is happily all in on this one. Clicking save. Adonis, some really, really good setups from you tonight. Thank you. And that is it, I think, ladies and gentlemen. We're at the end. I think we're running pretty well on time, so we might just quit while we're ahead and not do that. Where we go? We've got to go back to the disclaimer and remind you that everything is general advice. You know that. Don't do anything before you consider it carefully, or seek the help of a financial professional to help you implement any of the strategies discussed within. Trading, investing is risky. You're going to do losses. We saw some tonight, and I can't help but feel responsible for them because you probably got them from me. But hopefully, there's enough good ones in there just to just to keep you safe. Not safe, but steady, capital steady. Holding your own, treading water, because treading water in this environment actually, I think, is a very, very good thing. Hopefully we can make a few tweaks, a few changes to our model, maybe to start to embrace some shorts, particularly if we start to break some of those key technical levels we've talked about, and just give yourself a bit more flexibility. As I said, the alternative is to sit in hands, and there is no harm in doing so and you don't have to be a hero in this environment, okay? The smartest traders of my ilk, okay, the trend followers tend to be on the sidelines now. Now, there will be other traders, not me, who are really good at scalping. You know, they trade intraday, they can see those patterns, they have a feel for the markets, and they'll love this sort of environment, okay? Go out. I'm sure there's a zillion of them ready to talk to you on YouTube right now. If you buy their course or whatever it is, right? Go and listen to them, or not, if you prefer. And just stick to your strengths and trust the technicals, trust your analysis, and overall manage your risk. Thanks for joining me this evening, ladies and gentlemen. All the best for your trading and investing. Till we catch up again. Bye bye for now.